Welcome back to Income Trading 101, where we talk about technical analysis every day. Today is March the 11th, 2021, and we're going to make a video today on a little Forex, the euro versus the US dollar. And you'll find that these same techniques can work in crypto, they can work in stock trading, and they also will work in currency trading. So let's just go ahead and take a look at currency trading. The largest volume trading asset there is in the world. And if you don't believe me, just ask them. They'll let you know. But that's because there are billions of dollars, trillions of dollars traded of currencies a day around the world. And let's see, before I do things out of order, let's go ahead. We're going to zoom back in to basically 1 year ago. You can see the pandemic move and then kind of came on back, grinded higher. Let's go ahead and do a little moving average like we always do. So that in. Now, part of what's interesting with the foreign currencies, just like crypto, it doesn't, these markets are 24/7, but we're still going to use our standard 10, 20, 60 setup, even though they might not be as relevant for these markets. My goal is not necessarily to overfit the data. I just want to have some tools that give me a similar look that I can evaluate and compare and see what I see that may reference a win or a loss in the past. So go ahead and zoom in on this, see what's going on. So right now we do have a bearish on the 1 day charts. You have all three moving averages in line, pointing to the stock going, or to the currency heading lower, the exchange rate heading lower. Right now it's at 119.27. That would be euro per $1. Let's play around with time a little bit, as we always do. Take it down to the 1 hour just to see. So the 1 hour standpoint, even though there's this large down bar, it's very much bullish, with the 10 higher than the 20, higher than the 60. Let's take it down to the 30-minute and just see if we maintain this bullish posture. And we don't. The 30-minute, we get a little bit more of indication that congestion is coming. And I'll say that because you have the 20 day, the 20 period, the 10 period, and the 60 period out of order. And I always expect those to be in order when I look to purchase. And the last one, didn't mean to do that, sorry. The last one, looks like I have to upgrade my system a little bit, or my subscription for more up to the moment. Oh, look at that. It wouldn't let me take it down to, hey, there we go, 15-minute level. So at the 15-minute level, we also have a little bit of congestion with the 60 and the 10 being out of order. This 10 is slightly higher than the 60, and the 20 is above both of them. So this did look very bullish at the 1 hour level, and at the day level, it's looking very bearish. So let's go ahead and get rid of our moving averages. We're going to get a mix of data from the MACD, the moving average convergence divergence signal. I love this indicator as well. So when it works, it really works well. The challenge, of course, is that it's not as powerful during trending markets, which is what I'm seeking. But here we have a scenario where the this is definitely a buy signal, because the market is switching with the MACD above the signal line, and still in the oversold category. That is a good signal that there is property to be purchased. There are currencies, probably a good point to buy currencies and ride this thing a bit higher. But then they didn't fully cross the zero line, but they did cross each other and head lower. So You guys might wonder why I have such specific rules when using these indicators, even though the stock or asset class may vary, and it's just that I've seen it. I've seen people get banged up with these too often. So the caveat is always making sure that you understand what you're using for your trading signals. So back here in a few days ago in March, you had a clear cross below the zero line. This is the oversold category, so you would buy here. I actually like waiting for both the signal line and the MACD line to cross above the zero line before they start. You had a slight, what would have been a sell-off there, and then but it never went below, and it just stayed with it and has grinded higher since that day. So let's see, the day they were both above water would have been we've got, what's that, about 188.5 euro per dollar, and right now, I'm sorry, that was 118.5. Right now we're at 1.196. So pretty significant move in these terms. Let's drop this down to the 30 to see. The 30 is a lot more volatile. This is certainly a bearish looking signal in the MACD towards the end of the last couple hours, but a lot of that can change with one green bar. One more green bar could get this MACD back above the signal line. So this would certainly be inconclusive right now. And I'm going to just take a quick look at the 15-minute as well. 15 minutes showed a bearish signal, and it both have crossed the zero line. We would end up waiting for an up move, an uptick that will allow this line to self-correct and then probably pull higher. So ultimately, this is definitely bearish in the 15-minute. But when we jump back out to the 1 hour, it was also looking a bit bearish. I think I have to do 1 day. Yes, so at the 1 day level, it looks like we could end up crossing below the overbought. Below the oversold category, possibly come back higher. So all depends on what your time frame is and which one you want to use for entering a trade. I'm going to go ahead and close this out. Now let's do a little Fibonacci retracement. And earlier I was looking at a much larger picture of data, right? And what it all must mean or not mean for that matter. So let's do a couple of different ones. We're going to choose Fibonacci retracement. We're going to go from the very tip here down. Oh, let's get rid of this here. Escape. All right, here we go. All right, so this is a retracement of the first of the signals, and you see that when we climbed higher, we crossed the 38.2 and almost got to the half signal, or the 50% retracement. Now, yeah, we're gonna do one from here, this top, down to this bottom. There we go. So this is already past the 78.6%, and it's back down on the 80, what we're calling the 80, the 61.8% return level. So, and that appears to be offering a little bit of support. Let's get rid of this and just go for straight lines. So I couldn't help but see this. All right. Here we go. So this acted as support, resistance, resistance. Even though it wasn't verbalized, it was really resistance there as well. Let's see if there's anyone else that we've left off. Arguably, this one as well, this peak over here. Almost. We'll just leave it there. All right. So you see that back in July of 12, that same area provided support. We saw some resistance. And late July, early September of, actually that would just be September of 2019. And then we didn't see anything until August of last year. And we'll see if this area holds for any future support and resistance, because that's very important. And you know, there are a bunch of different ways to look at this. We could certainly draw trending channels higher. That's always a fun item, absolutely. Let's see. We're going to do... It took so little effort. It's unbelievable. All right. That's one of the things I love about this. When I first started learning technical analysis, we literally would have to pull out a pen or a piece of paper and a pencil. So trust me, this is so much better. Anyway, got a nice little upward trend happening there. Of course, we're already pulling out of that from the downside. So once again, I don't want to be one of those perpetual bullish people in this market. I really am going to wait and see how best to trade this currency tomorrow. All right. That is it for today's video. Thank you guys so much for watching. Please subscribe to the channel if you haven't already. Otherwise, have a great day and happy trading.